In like 10 years, 12 years time, the US dollar will be like wallpaper.
We are on the precipice of a major economic financial collapse. I mean, what we've just experienced, I mean, that's just the opening act. I mean, the real collapse is coming.
One stimulus package will lead to the next one and to more money printing. And so in 5 to 10 years' time, the real crisis will break out when the whole system collapses. That will be the end.
Eventually, this dollar's going to quit working, and then everybody's going to know what poverty is all about.
Our politicians need to understand why the country is in this shape. It's because of them. It's because of the Federal Reserve and their policies, their regulations that have distorted the free market and that have created this mess. And that if they don't stop doing what they're doing, there's going to be no turning back.
As the fiscal deficit goes up, the interest payments on the government debt also go up. They are now around $400 billion annually. I would think that they'll be around $1 trillion in 5 to 7 years' time.
Can you talk to us about the deficit? Are you worried? Should this be a near-term priority?
Everybody ought to be worried about the deficit. It's a big deficit, but the time will come to deal with it.
And so then the government goes bust, but before it does that, it will inflate its way out, or try to inflate its way out. And that won't work. So the next step will be to go to war. The whole thing will collapse.
Since the release of our first documentary, Hyperinflation Nation, 5 months ago, gold prices have increased from $925 per ounce to over $1,150 per ounce, while silver has increased from $14 per ounce to over $18 per ounce. The rise in the price of gold and silver is a result of the major monetary inflation being created by the Federal Reserve, which has held interest rates at 0% for almost a full year. Under the false pretenses of trying to get our phony economy to recover, the Federal Reserve is giving trillions of dollars away for free to bankers on Wall Street at the expense of the American middle class, who will soon see the purchasing power of their savings disappear. The false strength of our phony economy has become dependent on easy money and cheap credit from the Federal Reserve. The longer the Federal Reserve waits to raise interest rates, the greater the chances that our economy will overdose on excess liquidity. There will be two social classes of Americans in the future: those who sell their US dollars today and buy gold and silver, and those who buy into the false hope of an economic recovery.
It's sort of like trying to get somebody off drugs. What you're talking about is you don't want the withdrawal symptoms, and I admit there will be withdrawal symptoms. But keeping them on the drug, which is easy money, easy spending, and huge deficits and all that, that'll kill the patient. And the patient, for me, is the dollar, and we're going to be on the verge of killing the patient. And when you see gold up at $1,100 an ounce, that's a little bit of a warning sign.
If we keep interest rates artificially low, we're going to destroy the currency. We're going to be talking about, gold not just going up, to $25 in a day, but $50, $100 in a day, $1,000 in a day.
The U.S. national debt just surpassed $12 trillion, and the U.S. government itself is estimating a $9 trillion budget deficit over the next 10 years. If the U.S. government was a publicly traded company, it would be bankrupt, and its stock price would be zero. It's only a matter of time before the decline in the US dollar we are seeing today becomes a rout and the dollar returns to its intrinsic value of zero.
From what I read and from what I see, there's no intention whatsoever of US policymakers to do anything to stabilize the dollar. They'll continue to print money, and I think long term, my end value for the dollar is zero.
While they see it as a remote possibility, their big concern for the moment is the potential for a disorderly decline in the dollar, which they describe it as a momentum-led sell-off where the market would become untethered from fundamentals. In that event, officials say they have contingency plans of what they would say and do. They decline to specify what those plans would be. They insist those plans are not a matter of heightened concern, just prudent preparation, like a plan for the invasion of a country that is unlikely to invade. You never expect to need it, but it would be foolish not to have it in place.
There is no point for the government to make a contingency plan for when the dollar collapses, because at that point it will be too late. They should be acting to restore confidence in the dollar now, before it collapses. The Federal Reserve is nothing more than a counterfeiting operation. Since the creation of the Federal Reserve in 1913, 95 cents of every dollar saved by Americans has been stolen. Some might consider the Federal Reserve to be unconstitutional and this dilution of savings to be a crime. Yet there is still no widespread outrage about it.
This is not new. This is historic. The king in the old days always had control of the money. They did it in different ways. They clipped coins, diluted the metal, printed money. Today, it's really sophisticated. It's done secretly with a computer, and that's why it's made it so much more dangerous than ever before.
So who got the money?
To financial institutions in Europe and other countries.
Which ones?
I don't know.
$500 billion, and you don't know who got the money?
The loan went to the loans go to the central banks, and they then put them out to their institutions to try to bring down short-term interest rates in dollar markets around the world.
Well, look at the next page. The very next page has the U.S. dollar nominal exchange rate, which shows a 20% increase in the U.S. dollar nominal exchange rate at exactly the same time that you were handing out $500 billion to foreigners. Do you think that's a coincidence?
Yes.
Bernanke is not doing a good job. He's doing a horrific job. He's doing, about as bad a job as you could do. I mean, maybe it's possible there's somebody who could do a worse job. I mean, I don't know for sure, but there might be.
Federal Reserve Chairman Ben Bernanke recently said that the U.S. should cut down on its budget deficit in order to reduce global imbalances. This is hypocritical, as it's Bernanke who is allowing the U.S. to have such huge budget deficits by monetizing our government spending. Bernanke is the only person with the power to put a stop to this madness, but in his campaign to get reappointed, he most likely promised everyone in Washington that he would continue monetizing their spending into the future.
In 10 years' time, in my opinion, about 50% of tax revenues will be used to just cover the interest payments on the government debt, and that is unsustainable. Then you really are forced to print money.
Have you ever looked around your house to see where the products inside of it were made? Most likely 90% of them were made in China. How could the US have the biggest economy in the world if so few of what we own is made here? The US's biggest export is inflation. Because of the dollar's status as the world's reserve currency, we can just print the money to purchase the goods we consume. However, the world is now looking to move away from the dollar as the world's reserve currency.
This should be front story on the evening news every night. I mean, this is a big thing. Our credit card is about to be taken away. I mean, the reason that this country has been able to survive all these years is because we can print money instead of making stuff.
It is the US dollar's status as the world's reserve currency and the fact that foreign nations are forced to trade oil and other commodities in US dollars that has kept the US economy propped up until now. Recent reports indicate that Saudi states are meeting with countries like China and Japan in order to end dollar-based oil transactions and begin transacting oil using a new basket of currencies. To further their move away from the US dollar, China's Ministry of Finance recently announced plans to sell billions worth of 2-year, 3-year, and 5-year yuan-denominated bonds in Hong Kong. Shockingly, over the past 3 months, foreign central banks have put 63% of their new cash purchases into euros and yen, and not into the US dollar. The US dollar still accounts for 62% of the world's foreign currency reserves at foreign central banks. But for how long? India just purchased 200 metric tons of gold from the IMF for $6.7 billion in order to diversify their reserves away from the US dollar. How low will the US dollar fall, and how high will gold rise when more central banks diversify out of dollars and into gold? Despite China boosting its gold reserves by 76% since 2003, gold still only accounts for 1.5% of China's foreign currency reserves. Yet, China still owns $1.6 trillion in US dollar reserves. Most telling of all, China is now encouraging their citizens to invest in silver and will be offering silver for sale at banks in China.
Tuesday's first ever investment opportunity for silver bullion. The bars are available in 500 grams.